All right, folks, let's make sure the sound is okay. I think it's all right. Let me know if I'm super loud or anything, or if you can't hear me for any reason. I guess then you wouldn't know to tell me. But it looks like we're on. So this is Red Ben. If you want to get a hold of me, I'm available on Twitter at Red Ben Trader. Um, I am not a verified, like blue check mark user on Twitter. So if you want to get DMs from people who are unverified, realize you have to now go to your preferences and like change that preference to say that you want to be able to talk to people in DMs even if they're not verified. I've had a lot of people send messages and be like, "Oh, I can't get a hold of you on DM," and it's like, yeah, because you're not getting my responses. So, yeah, if you wanna chat on Twitter, let me know. Just hit me up anytime, and if you want more information on the algo we're going to look at, it is based on the Trade and Perform algo. That program, it runs on Sierra charts, and it is a proprietary chart book. You can get it from my coach Simon. Everybody in the trading room that Simon runs, Trade and Perform. Sorry about the cat; he's really noisy. um, Anybody in the room has access to the algo, so you can give them an email at trade the letter n word perform at gmail.com. I tried to give him something to do, but I think he's decided he's figured out the trick that if I give him stuff to do in the other room, that I must have fun, exciting things going on over here, and he feels like he's getting left out. Anyway, it is July 19th, technically here, but about to be July 20th in Las Vegas, 2023. Let me get live quick. Guys have obviously gotten all that information already. We're looking at something a little bit different than I'm usually using. I'm really trying to pare down what I'm looking at, um, like especially while I'm live trading. I really do love like the the studying aspect of trading, like being able to build a system is it's fun. I'll be honest. Like it's exciting to for me anyway to like find new setups and filter out different entries and back tests. I actually kind of enjoy that backroom work. But the more you do, the more you end up having so many options of what you can trade that you can get stuck like basically in analysis paralysis, or just having signals everywhere and not knowing which ones to like ignore and which ones to follow. So since it's the summer and there's typically Ronan, you're gonna have to leave. Sorry, you're just too loud. Go. There's just typically not a lot of volatility. I mean, there could be. It's not like it's outlawed, but typically because there's not as many traders institutionally, they're out, in Miami or Italy or wherever they go, south of France, Nice or whatever. So a lot of the institutional desks that give a lot of the volume to the regular market are just absent for at least a month. That culminates probably in early August. So we are at least likely to come into a period of slow, grindy markets. You never know, though. When you have lower volume, you can get low liquidity as well, like real fast moves. So I wanted to share some new ideas that some of them aren't actually new. They're just like new twists on old ideas, which is usually what works, honestly. rather than starting over, like, don't recreate the wheel, like go back to something that you know works sometimes, and then see like, I wonder if I in, input this and filter out that, like maybe then it'll work in this other situation. And yeah, I found at least a few things to share that look pretty cool. But the one limitation with these setups I'm going to share today is I have not tested them in fast markets. And after speaking to Simon briefly, it sounds like he has tested something similar, and it struggles in fast markets. So it basically needs like recalibration based on the like how how big the rotations are, and how active the market is. If it's moving back and forth, honestly, like most of the things that we do end up working. That we typically do in the trade and perform room, trades like trap trades and like all the scalp concepts, and I'm going to share one of those later. But as an alternative, because what's neat about a lot of those is they work in slow markets and fast markets. But the frustrating thing for slow markets is sometimes there's just not a lot of setups, and it's often difficult to figure out where to like spend your energy, because there's so much waiting involved that you end up like either tilting because you missed the move and then forcing trades and blowing up for no reason, or like just like not catching anything and having, the market move 100 points without you. And even if you don't tilt away your week or whatever, like it's still frustrating if you like don't have a way to kind of take advantage of it when it does that. Because and when I'm saying slow, I'm not necessarily meaning it's not moving. But if you look at, so this is the 24 tick of NQ. If you haven't seen any of my streams, this all looks very foreign, and I apologize. I don't have time to like explain everything, but I'll try to explain what I can. It's a Renko chart. There's signals and colors and stuff that are basically telling me what's going on the footprint. The algo is reading the footprint and interpreting all of this stuff, and then alerting me with signals when there's conditions that I want to know about. So if we go back to like yesterday, I think, no, yesterday was the straight up day, right? Hold on, let me see. I mean, I guess that'll work too. We could do that, yeah, because that's very typical of summer slow markets. So if we go back to, I guess we're all the way back to Friday. Friday was kind of similar. So when you're in the summer, or when it's slow in general, what you're gonna see, it's not that the market doesn't move, it's that the market doesn't necessarily retrace and return to the levels that like are ideal for trading. It will leave an area and never return, or not return until like later in the session. Whereas with fast markets, what you'll get is a lot of rotations, plenty of opportunity to do business in any area. It'll leave the area, continue to rotate, come back, wiggle around back here again, and then maybe go. With slow markets, you get, I guess I didn't load enough bars to go further, but like for last Friday, you got this is all of overnight. See that this is all it did overnight. So it wasn't moving much at all, because there's not a lot of like interest overnight. And then once it opened here, I guess this is pre-market, but you can see like it hasn't really left the area at all. It opens, it leaves that area, and normally a lot of people who use like levels to trade, and I mean me too, like I'd prefer to have a setup in like an area that's been like tested recently. It gives you a little bit of context for where to trade. If you just mark like this, level as like an important level. You can see when the market opened, it was already above it. And in a fast market, the chances that you come back here and trap under here before you take off is much higher. But in slow markets, what you're going to get is just like melt up. And you can see this was like the first 30 minutes here, and by the first 30 minutes you were already like you I was waiting for a pullback, basically, is what I'm always doing in the summer. Is like, if only I could get that price again, is what I end up thinking. And then you don't want to be buying breakouts because the grind is like, it doesn't have a lot of volume, like this one did, but these are cumulative volume waves, and like it's not building volume on the way up. So it's very like, it feels unhealthy, if you will. If you've watched markets for a long time, you might know better than to just buy the breakout during markets that are grinding, because the breakout will generally result in stops getting hit and then a return, and then breaks out, takes liquidity, pulls back. Now, a lot of our trades look for setups down here, and those just don't develop. And it doesn't mean there's anything wrong with the system that we're already using. It's just that the highest odds trades don't necessarily set up in the summer or in slow markets. So you don't abandon those ideas, because if they do show up, it's great. You've got high win rate, high risk reward. It's the A plus setups are still going to be the ones that work in fast markets. Those will still work in slow markets. This doesn't replace any of those trades. But when you're not getting that opportunity to get the high odds trades that you wanted, where you get a retracement back to a level that like was old resistance, for instance, to try to get it to new support, because like I said, if you can't buy breakouts, since it's not like building energy, but it's just grinding up, it's not really pulling back, then what are you supposed to do other than get frustrated as it just rips? And then you might decide here, okay, fine, I'll buy the breakout, and then it's over, right? Or you were waiting all day for that level down here when we opened, and you're like, okay, if it can just come back and fill me, I'll get long. But it doesn't reach it and just takes off again. And like, if you look here, this move here to the green area, if you look back here where we started that day, it's the same move. It's like they opened again, but they didn't return to like test the open. It was maybe a fib or something, but it's just like in the middle of here, right? You could probably catch it here. Yeah, but I mean, it's not pretty. It's never like, I don't know. It's just not the same. It's not as easy. You can't just like draw lines and wait for things to return and buy it. And I don't know. It can be a lot harder, in my experience, to trade slower markets. Plus, I think the really frustrating thing is, okay, so let's say it breaks at the top here, and like maybe you saw this and you're like, this is unhealthy, I want to short it, but I'm going to wait till it's on the backside. And so it finally breaks a swing, technically here, and that's where your short comes. But let's say you waited for this one because you didn't really, like, you saw that as not acceptable for some reason. Like, if you get short here, what ends up happening is you get one trade, and then you're probably shorting this on the retrace, thinking it's done. Because remember, this was unhealthy, right? Like, you put in all this volume at the highs, you were grinding up with low volume, but it just just eats theta for like an hour. And no one's able to really get paid. And then finally, after taking all of these stops, then it starts melting down, and that is really the only obvious spot to short when it comes back to that same level. And that one worked, and then you finally get back to your level that you might have been hoping to get long initially. It tries to go and it rolls over. So and then, it's either you're short or you're losing basically. But again, even on the downside, it's see how like usually on the downside, you don't get this opportunity, these like long consolidations like that. I'm not going to say never, but like a lot of times when it's fast, you get the big move, the hard retrace, like the 50% retrace, and then you get short and it just rips through the low. That's not how it works in slow markets. So, and again, like I said before, if you were looking for trap trades behind Apex, like we usually do, you're looking for a short after this. You want it to come up here, take liquidity, and roll over. It doesn't happen. You want a short above here. It doesn't reach, right? You do get one here. This would be a good short on the triangle down, but then this one doesn't. This one doesn't. And now the day is over, basically. And look, this one does. And then stops out. And then it rolls over. So you get just a lot of messy price action because there's not a lot of participants. And you just don't get as many opportunities. So what do you do about that is the question. There's kind of two schools of thought. One very reasonable solution is just know what it looks like get a feel for that PA and that price action and just don't trade it. There's nothing wrong with that solution. In fact, it's probably the more professional solution there is, because if you have a system that works often, but you know that if it doesn't set you up for a trade that you're going to get frustrated and perhaps like make mistakes, well, then don't trade. So that's one solution. But here's another. Here's just so look at this. Like if you were looking long, you didn't get there, you didn't get hit there, you didn't get filled there. They rip up, they don't give you a pullback into this level, right? It's just shallow. And then if you finally bought this breakout, they roll you over. And then it's like, oh, okay, backside. So I'll short, right? I'll just short a retrace. So you come up here, you short it as it breaks down through that level, and boom, it's stuck. So I don't have a great alternative to not trading for this kind of action, the very choppy, like not going anywhere, just market stalled. The only solution for that, if it is slow enough, is to go to a very small time frame. So if you look, this is the 24 tick, and once you got this really choppy action, and this is the crazy thing is this is 8:45 a.m. on a Monday, like the Central Time. So like this is 15 minutes after the open. Like this is the open on Monday, and then it just chop 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 chop. Like normally this is where you get all your big opportunities and rotations, and it was just stuck. If you go to once you recognize, like I said, let's say right maybe here, you're like, huh, that's weird. If it was bearish, this should have broken down. Maybe it's bullish, or maybe something weird is going on. And you wait, and it's like, oh, okay, it's bullish. And then it tries to pull back, and maybe you get long, and then it breaks a swing, and then it comes back and sweeps your stop. So right there, you might think, okay, this is definitely unusual at 9 in the morning. So let's go to a smaller time frame. If you look at the same area here, I can make sure we're including all of it. The same area on a smaller time frame looks a little more tradable. A way to know if something is, if you're on the right time frame, a very simple way is we use these Keltner channels. in the room they don't use the midpoint. I really like the midpoint of the Keltner channel because you can kind of picture where it is without drawing it. But normally in a balanced market, what we expect is that in a balanced market, we should have most of the volume going off inside of the Keltner channels. That's just the way they work. And very little volume should be done. Oops, I guess you can't see that because I've already got one that color. So see the yellow line is where it's like the biggest volume point of that bar. So it's if like each one of these bars, for instance, are 15 ticks. So and there's 4 ticks for each point. So this is we're very zoomed in. It's almost 4 points per bar. So like, and it's NQ, so it generally moves a lot. So rather than thinking about this as an entire bar, the like a way to kind of quickly interpret what's happening is to watch where the biggest trader was. It's not necessarily one person, but like the price that had the most trades in that Renko block. Where did you come from? Go. Um, the price that had the most trades. So it could have been any time during that bar. And remember, they're Renkos, so some of these bars could last a long time, but it's just how it lasts as long as it takes for the market to move from the middle to the bottom or the middle to the top. And in this case, it's got to move 15 ticks. So here, most of the traders were above the Keltner channel, and here they were back inside of it, and then here they were above it, here they were above it, right? So most of the volume should stay inside. The yellow line should spend like on this. I'm going to say time, but it's not necessarily time. But like looking at time here, most of that time should have the yellow line inside the Keltner channel, and it should generally be able to rotate from the top or above the top to the low or below the low. It's obviously never perfect, and there's always some randomness, but in general, if you want to guess what to expect, if you're looking at a time frame with rotations, that's what we should expect. On the other hand, if you have a time frame without any rotations, what you'll get is either all of the action taking place on one side of the Keltner channel with the failure to get back to the other side. Now, this little consolidation didn't take very long, so that's not all that unusual, but this over here, they just get longer and longer. See that? How like first they can't get out of the bottom channel, then they can't get out of the top channel. It's not natural. This is getting a little bit more rotations, but they're not even reaching either side. It's just like stuck. It's not going anywhere. So that's one thing that happens. And that, if you see that, it basically means the only way to trade this is to go to a very small time frame, like the 15 or even the 7. And suddenly you'll see the rotations here. And then the other thing that can happen in slow markets is the grind, right? Straight up. For usually, sometimes it's the straight down melt, but oftentimes it's the grind where like sellers are just absent. So it goes from looking very natural, going from the top to the bottom to the mid, and then the top, then to the bottom, right? Looks pretty good. It gets a little stuck here, but then it comes back up where you expect it to go. But then if you see here, this whole time, like literally all of the volume, that yellow line stays above the upper channel. of, or the upper line, well, we call them rails. So that above the upper rail um, of the Keltner channel. And what that basically tells us is that there are no sellers. It's not a neutral market, it's lopsided. Somewhere back here, sellers are trapped, and I'm going to show you how we see that um, before it happens. But once this occurs, where you can't get back into the Keltner channel, the rule basically is any trade that we normally take, like all of the trap trades, all of the stuff that usually works when it does this, or they're just not going to set up. You're not going to get any opportunities. And then generally, when it's done, what you're going to get is a pullback all the way through the Keltner channel, and then usually a return to the top of the Keltner channel. So while it might look sexy to get this short, which I mean I have signaled, but you wouldn't necessarily know that it's this one and not this one. But you'd have a little idea, but not a strong proof. Um, there's divergence, there's ways, but like it's not going to be anywhere near the win rate of like your typical trade and perform entry, which like normally we get like 65+% is what we want, like where they really do work more often than not. We're not taking the 35% win rate trades, not with leverage. So because we're trading futures, so like you can't just hold like until support and like buy a breakout and let it pull all the way back on you. Like that's you're gonna get crushed. So you need to be selective and find the spots that give you the high win rate, and those just aren't going to materialize when it's doing this. So are there ways to catch this? Yes, but those continuation trades have lower win rates. And when you have, like I said, when you have a system that can give you the higher win rate, if you're just patient, it doesn't make a whole lot of sense to like chase. Like, why gamble with a 35% win rate when you can just wait and get the 65% win rate? So, for instance, this, like, I'm not even worried about that. And then this, like, I'll take it if I get a clear setup. But normally I'm just missing that, and I'm totally fine with it. But once it's pulled back like this, now our trap trades start to work, and we can target the top of the rail, and sometimes the top rail, I mean, sometimes if now, since we got in so low, I really can put my, see, in this case, you're not touching this, you're not getting bearish, you're seeing this as just a bullish chart that needs a pullback. And then once it pulls back naturally, we're looking for an apex, which has these little triangles on it, the blue ones. We're basically drawing a line, and we're waiting for price to come back through there. And then what I want is, no, the normal trade is, if this has an algo signal on it, like a star, you can go ahead and long. But if you want the really high win rate, what you want to do is wait for a trap and then wait for a white triangle that it, like, so basically a triangle pointing in the direction of your trade. And if you want to increase your win rate further, but it might filter out some good trades, you wait until you have a seller trapped, and then what you want is the triangle to the opposite direction, triangle down first, and then triangle up shortly thereafter. So in this case, this is just, we don't have that trap trade yet here, but we have the apex trap, which is just find an apex, draw a line, and then you'd normally put your stop under there, but it doesn't trigger here, so it ends up triggering on the triangle up, which is here. So for me, I would then put my stop under this apex, and my entry goes anywhere in here. It doesn't have to be immediately here. It could be on the pullback, but then I'm taking profits at the rail and then holding my stop there, not moving it to break even, because that doesn't make any sense, because we expect price to go back and forth in the channel. But if we can comfortably leave our stop behind the channel here, you can sometimes, like, you're gonna get this move 65+% of the time. Sometimes, if you can be patient enough in the summer, you've got like the low, and it will just grind for hours. So and then once it does, by the way, once it does this and you get outside of the top rail again, now in my opinion, if you still have contracts and you didn't hit your target, like here I probably would have just exited, because it hit a target that was resistance earlier, or maybe support. I don't remember why it's marked, but one way or another, it was an important level previously. Yeah, right here. So that's a good spot to exit in general. You don't need the top, but you get, I mean, in that case, you're getting long triangle up. So the highest you would get long would be 29, and your stop would be under this. So like, let's say, oh, well, let's just say 09, just to make the math easier. So 20-point stop, give or take. Like I said, I'd probably get in on the pullback, but it doesn't matter. 20 points. And then you'd want to get it to touch the top rail here. And so that's your 1-to-1. That move is going to happen literally 65+% of the time, as long as it looks like this and it's like grinding, and still bullish, right? You have to actually have a bullish chart for that to work. Otherwise, it's the exact inverse. So then I would wait for a natural target. So this would be one, or on a higher time frame, we can find this level. That came from the profile, I think, now that I think about it. And so that, and we, like I said, for then, we'd leave the stop where it is. So here, we're looking at like maybe like 79, let's say. So that's a 50-point move for a 20-point risk. And then if you got up here, you're talking like 99. So, I mean, you could have like 70, let's say, point move like right off the bat, but there's really nowhere to move your stop until at least you get above the rail again, and now you can probably move it a little higher to one of these supports. But if you have the inkling, like if you're nervous about losing money in this situation, well, giving back money, what you want to do in that case is you want to leave it. Well, what I should say, what I want to do. You can do what you want to do. I mean, don't do it because I do it, but what I do is when we're grinding like this, where we can't like get out of the like we're just hanging out right on one side of the Kelvin channel, my stop needs to stay down there, because if you put it here, it can definitely come back and grab it, and that just sucks. So because then you have like a almost like a break-even trade, and it's just irritating when it goes 90 points from there. But once it gets up here above the rail, if you want to take some profit, I can. And then once it gets up there, now I can move it here. But when it's doing this, and it's like yeah, bouncing back and forth, it is very normal to do that. That maybe not that deep, but a pullback. But if it's gotten above the rail like this, there's a oh hi, there's a chance that this guy gets trapped and you come all the way back. Well, I mean, there's always a chance for that, but there's an increased chance of that when you get a bull bar out there. So now, if you want to pull your stop up to break even, now you probably can. And certainly, if you start going above and then pull back and hold above, well, now you can be aggressive with it. Honestly, you can just aggressively move your stop up, and like I'd probably just go like I'd probably get stopped up right there. Like just aggressively push it. Cuz look, I mean when it does this, yeah, like you might lose this, but if you got in down here, you don't want to move your stop to break even, right? Like let's say you got in like on that triangle for some reason. If you take it all the way up and then you had your stop here and you're like, okay, I got my risk off. I'm going to move my stop to break even. It comes back, it takes your break even stop, but it leaves your initial stop. If had you just been a little patient and waited for it, or like I said, what I'm doing is I'm just aggressively pushing it, and then if I see it bounce off, like a little bit of a tangent, but I think it's useful, hopefully. So right here it bounces off the rail, and so my stop is going to start getting trailed pretty aggressively, like probably like not right behind the wick, but like at least behind the VPOC before that. So I'd probably put it like there, and then if it pulls back, hits the rail and bounces, so right here on the triangle, my stop is going under this one, and then it does it again here, knocks the rail. So once it gets up here, my stop can move up here, and then it knocks the rail again, right, and lifts up. And so now I don't want to see that to get taken, and that way I can just aggressively get out, especially with these Apex accounts with the trailing drawdown. That's how you handle that. That's how I handle it. But if you're trading cash, or if it's doing this back and forth inside the channel, well, you just have to leave your stop down here, and or you take the 20 points and you just get out and you wait for the next setup, because in the future, like there will be more traps, right? There'll be more opportunities. You just might have to wait 2 hours rather than 20 minutes like any other time than the summer. So, but then here, the same exact thing, right? Right here, after this bar forms, I'm putting my stop here. And then once it comes back in, I'm probably just done with the trade most of the time. Because if, again, I know, like I said back here, I know that most of the time when it does this move and then fails to go any higher, the next move is usually bottom of the channel, top of the channel. And then from there, you don't know. It's either going to go down or up. But here, above the channel, bottom of the channel, top of the channel. So like this area is a pretty good spot to look for a long if it sets up. It doesn't always set up the regular way though, because it's just so grindy. Like it doesn't stay in one place. It just kind of like it does this often. So here's that move again. My stop would have to go all the way back there till here, and then I get stopped out. And then what do? We go back into the channel. So what do I expect? Bottom of the channel, top of the channel. That's usually what it's going to do. I'm not just going to buy it here, right? Because otherwise you're going to stop out here, you're going to stop out here, you're going to stop out here. Well, you might not stop out there, but I need to see it set up at the bottom. So it could be here. This is a good one with the plus sign. Or it could be a trap trade around here if we get a triangle up. Nope. And see, that's the nice thing is if you wait for the triangle, the only place that a white triangle in this case, the only spots that you could even possibly enter would be there, but those didn't trap on an apex. The only, like, even if you did the head and shoulders concept, oh, I guess that one might have, but yeah, that's the only way you might get this one. And then I'm going to show another way to get this trade. Okay. Now, make this perfectly clear. I'm not trying to replace anything that Simon is teaching. I'm only adding ideas that might work during slow markets. And I expect that they will stop working when it gets fast again. But as long as it's slow, I got to give credit where credit's due. We have a great team, and my team member Ronnie asked me if I could code up an idea for him, and we did it. And through some like filtering and stuff, we figured out how to use it. And at least so far this week, it's looked pretty good. So we're gonna dig into it a little bit here, and maybe back test it a bit. Let me find a more advantageous spot for this setup. So what we're looking for, that green arrow right there is the signal. The inverse is the red arrow. So that is the signal. I'm not going to go into how to code it, but that is the added signal that says basically there might be another trade setup either now, well, coming up soon. The tricky part is rarely does the arrow itself give you enough evidence to get long, let's say. The short is just the inverse. So the arrow all by itself is not high. I don't even know if it's plus EV. Like, it might work less than 50% of the time. I'm not sure. But what does seem to work in slow markets like this is specifically get an arrow and then in addition have a triangle down like this, the red triangle, and then a triangle up that's above that triangle down. Now, it can be like this, where it's triangle down, arrow up, triangle up. And remember, we're not talking about the apex triangles. Those actually show up 3 bars late. We don't use them for signaling. We use them to draw lines off of because they're the swing lows and highs. So real time, you can see the red triangle, the arrow, and the white triangle. So this specific setup is aggressive when it's an immediate entry right after the arrow. That's the most aggressive one. And really, the best place for that to show up is touching the blue lower rail or even a little below it. It's the higher and higher you enter on triangles in general, any triangle trade, the lower your win rate. So if the triangle that we are entering on is at the top half of the channel, what ends up happening most of the time is either it, like this one, for instance, this triangle, it's not an entry, but let's say it was. If you entered at the top of the channel here, a lot of the times you're going to hit resistance and then reverse back to a support. But if you want to have a 20-point stop, your stop would go, I guess here. No, it'd be here. And you would definitely get stopped out, and then it would go in the direction you wanted. But even if it's not severely out of position like this, this is a severe triangle, like way out of position. We want it down here or maybe at the middle, definitely not above it. Um, this one will often fail unless it's extremely bullish. Things change when there's evidence that sellers are trapped. Almost any bullish entry works, right? But we want to find something that like works most of the time as long as the conditions are right. So the triangles that are up at the top of the channel are just generally not a good idea to buy. But the ones in the middle of the channel like this, especially when they're pink, they can be okay. But what you have to be prepared for is a pretty significant pullback. Usually one bar, one Renko bar, sometimes two, but usually one. And that bar usually has a pretty big wick, which means for a moment, because remember in the Renko world, like this bar closes at the high, and then time wise it starts here and it goes a little higher. But then in this case, it went back through this bar and then traded another 15 or no 24 ticks lower to close it bearish. So for a moment you thought that this looked like it was going higher, but it hit this resistance and pulls back. It's very uncomfortable to hold that trade during those big pullbacks because your stop really needs to go here and it can get pretty close to the stop. So instead of buying up here or up here, what works really nicely for this specific trade where you have triangle down, arrow, triangle up in a generally bullish environment when it's slow, is you can actually expect that more often than not, the VPOC, the little dash in the bar with the arrow, is usually tested or at least approached. So I'm not going to put my limit order at that level, but it does kind of make sense once you see this triangle to wait before you enter and get in maybe back here at the bottom of the triangle, because I expect the arrow bar to at least get partially retraced before we go higher. Now, sometimes that doesn't happen. Sometimes it just runs and then you'd miss the trade. But when it does work, my stop is still in the same spot at like 40. And so now I'm getting a 13-point stop, which is pretty awesome compared to whatever it is, 20 or 19. And then my target can be here and I can still get more than 1-to-1. And then if it happens to go higher with runners, that's great. Okay, so that is the most aggressive way to trade the arrows. Is now realize if you trade this counter trend, it's gonna rip you a new one. Like for instance, the inverse of triangle down, arrow up, triangle up is triangle up, arrow down, triangle down. And in this case, you would get stopped because you have to put your stop here. It comes back and takes your stop, and then it approaches your target. So the only way to do it counter trend is to see the trade fail and then hit it the next time. But your expectancy is not good because it's counter trend. So instead, what I'm going to do is just skip those. There is a way to do it, but there's no reason to. So, so that's the most aggressive way. You'll see, though, that a lot of times these arrows show up and the bar before it did not have a triangle down. So the general rule for me is, now this got really bullish, so it'll work here even though normally it won't. So let me find a spot that actually sets up the way I expect it to set up when it doesn't go straight up. And then we'll talk about it in a minute, but see how the further up the arrow is, the less likely that triangle that may or may not follow it gets any push. We want those green arrows to show up lower in the channel. It's crucial. Okay, so if we look at the green arrows, this one did not have a triangle down behind it, right? So, and which is going to happen a lot, but it's near the bottom of the channel, as are these. Now this one did have a triangle down below before it. So the aggressive entry is triangle up after that, or on the pullback. And remember, the expectation is that normally the market wants that VPOC to get retested. So, and then the stop needs to go here. And then I'd like to get 1-to-1. And sometimes I'll get more, sometimes I won't. So that, again, is the aggressive trade. Now, obviously, it's not going to go to high a day every time. That's not the way this setup works. But the other way, let me find another one. Here we go. Let's see if it sets up the way I want it to. Not sure. Looks like it gets under it. So here we go. Okay, the other way that this sets up, the more conservative entry, is when you get a green arrow, you can either begin to look for trap trades. So draw a line at the apexes, right? Apexes. And if you get a test below one of these or more than one of these apexes, and then a triangle up or an algo like a star, you can try to enter as long as you are above the arrow. Now in this case, we were not above the arrow. So the trap trade would not work. The apex trap trade would not set up appropriately because of where the arrow was. The fact that we went lower. If the arrow was here, then even without this green arrow, the star could be an entry. But in this case, you're not above the arrow, so it's not ideal. But so that's one. And the other conservative way is once you've gotten the arrow, as long as you don't trade under it, and then, which we did here, and then find this area as resistance. So if we come up here between the VPOC and the high, and they reject it, we can just forget about longs because most likely they're going to get trapped. So it's probably bearish. But as long as that doesn't happen, like as long as you're still doing what we expect, which is go from one side of the channel to the other, hopefully that is becoming a little clearer now. Right, that's just like the regular market rotation that we're trying to take advantage of. As long as that is happening and we've gotten a green arrow to the left and we aren't stuck under it, once you've gotten the green arrow, if you get red triangle and then white triangle that closes above or equal to the green arrows, see that? Same level as the green arrow. The triangle is closing at or above the green arrow, and we've got a red triangle down, like the very, it's got to be the last down bar in a rotation that has the red triangle down. So like this one doesn't count because we would have needed an up bar and then triangle up. And then this one doesn't count because we had another down bar. And you can tell it's a down bar because it's got a wick on the top. So extra down bar in between. This triangle up is, it's not wrong. It's just not necessarily the best entry. And here's a triangle down, but there's lots of bear bars. So this triangle up is not this entry, plus this triangle up is below this arrow. But once you get, especially if they're in close proximity like this, arrow up, triangle down. Whoops, I'm pointing to the wrong one. Triangle down, and then exactly 2 bars later, triangle up, which I have an algo for, but I'm leaving it off for now because I want to. I don't want to just filter out just that conservative trade. I want to see what else might work. But that trade will usually get us to the top of the channel and sometimes higher if it's bullish like this in these grindy slow markets, not in fast markets. In fast markets, it doesn't set up that way. So this will likely stop working when we get faster. But as long as it's slow and like there's these moments of low liquidity like this that you might be able to catch on to, as long as you can find a spot that has good risk reward. Because again, here you're entering at the levels. You're entering at like 1150, and then your stop is like maybe 5150. So is that right? 7150. I'm like, what? Yeah, so 20-point stop, and then 9150 would be right there, would be 1-to-1. So that'd be my first target. And then you leave your stop here. And then once they get outside of the channel, which occurs here and here, although those are pink bars, which we'll get into in a minute, but they often get tested. So if you want to leave it down here till the non-pink bar that gets out, you're going to get stopped much less. But you can, in my opinion, I can find, if I have a support after that was between my entry and the time it got out. So if we would have done that, I could move my stop from here to here. But what you don't want to do is when it does that and it gives this mini pullback, you do not want to put your stop down here, because if you recall, once you've had a green arrow, apex traps, and you're above it, and especially when you're in supernova, which means that like we've gotten an apex and we've closed above that, and then we're not below the green arrow, right? Now this apex trap, this star, is going to be really good. So what I'm usually doing, what I was doing today, is I would take this based on arrow, triangle down, triangle up, get my 10 points, hold a runner, leave my stop down here. When it sets up again, I'm adding and reducing my stop to here on all of the contracts. So what that basically means is if at the end of if after this, so at this point, if it drops and stops me out, I wouldn't lose any more than what I would have lost if it did that. So what I'm putting at risk is my profits that I took there plus the original risk of 20 points that I already committed to the trade, I'm reducing my stop to basically break even. Doesn't have to be break even, but it's just wherever that is. Yeah, it's break even. So if I got two contracts, just to make the math easy, you get 20 points at 20 points risk, right? Make 20 points on one contract. It pulls back. Now that stop, that risk, gets decreased or reduced. So, and then because I have no risk on the trade, I can now add that contract back in right here. And in fact, I can add two of them because if I add one of them, my risk is to give back this and I'd be back to zero. But because I had mentally accepted initially that I might lose 20 points if it did this, well, it's still the same trade. It's just a later entry. And I've already made some money on it. So rather than just take one contract here, I will basically reinvest my winnings here, my earnings. I'll reinvest it here. And if I get another 10 points, or maybe 20, I'll take one off and then leave the runner as long as I possibly can. Now, unfortunately, Tuesday, I thought I hit the jackpot when it did. I moved my stop to here, right here. I got trailed out here, and I thought I was a king. And then it just kept going up, 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 up. Right? So you never know. Um, you never know. Let me real quick grab another water. My throat's a little dry. I will just give me a minute and a half here. I will be right back, and we're going to look for some more of these. And I'm also going to show why you don't take the arrows blind without waiting for the rest of the setup. Or I should say, like, don't take them naked. You need the actual setup, not just the arrow. And then I'll also show you the short, although we'll have to look at different time frames to find some that work because it's been going straight up. So yeah, 2 minutes, guys. I'll be right back. Okay. That's better. Oh, sorry. That was loud. All right. My apologies. So, okay. When the arrows, I'm going to get right to this because this is super important. When the arrows are not in position, again, in position for the longs is down here. See how, like, the ones that are really good are at the bottom? And then you've got plenty of room, and your stop goes where it belongs, like underneath or at the bottom of the channel. Because, like I said, most of the volume is going to be in here. So you don't want your risk point to be where price is likely to go. You want it to be below that. So when the arrows show up way out of position like this, it's not bearish, but you have to be very cautious. Now, yesterday was the anomaly. It's not normal to see this movement, but I just want to demonstrate that in this case, yesterday, again, you're clearly above green arrows, right? It's bullish and you're above green arrows at the moment. You get triangle down, arrow, triangle up, very aggressive, and it's way out of place. So if you take that trade, it's not going to work, but maybe 30% of the time because it's so out of position. But that's what it looks like. But notice just even getting paid on your initial like 20-point move takes forever, and you get this big pullback. It's very uncomfortable. So that's one reason, is that literally even when it does work, it's excruciating. Plus, and then here's the one that does work: green arrow, triangle down, triangle up, even or above with the green arrow, and it's got to be like right like this. Triangle down, gets trapped. It's even better that it's a star. So if you get this, all good, right? And in this case, you're a little bit better because your stop is like at least in the bottom half of the channel. This is asking to lose money in my opinion. This putting your stop here and getting long here, it's going to work so infrequently. It worked yesterday, but out of like 100 times, it probably works maybe 20. And you'd have to be really good at knowing that it's bullish, because no doubt one of these are going to stop when it's not bullish anymore. But Tuesday, like anything bullish was just working. So the other, well, yeah, I'll get to that. But once you've gotten the green arrows and you are equal to or above, what you're going to see is triangle down, triangle up within 3 bars like this. It's going to usually work, but you have to be very aware of where you are and what the price action is, because normally this is extremely dangerous to take a triangle up above the channel like this. It's usually suicidal, basically. But in this case, we got back into the channel and they could only hit the midpoint, and then they came out of the channel again, and that's just extremely bullish. And so here they can't even get like into the midpoint, and so this is going to capitulate straight up most of the time. But that's the anomaly. That's unusual. Usually, if you recall, if you get out of the channel and you come back in, you're usually going to the low and then back to the channel and then back to the high. But here we couldn't even get any bearish VPOCs under the midpoint. See how the yellow line, the VPOCs of the bars, they got under it, and then it closed bullish. They couldn't get under it, couldn't even approach it. Like it just the VPOC is getting further and further away from where it belongs during neutral markets because it's not neutral. So, and then if you try to take the bear trade here, so look, there's a in position, right? Red arrow. It's where the red arrows are supposed to be. It's the inverse, so of the green. So it's above the channel where it belongs, right? So once you get this, you would need to stay under it or equal to it, and then get a trap back in, or triangle up, triangle down. And so here it did not set up because we went down on immediately. And like I said, it might look enticing just to sell the red arrow, but I'm telling you, it's don't do it. It doesn't work often enough. Look, like even on the upside, this happens a lot, and then it goes. Again, we're very abnormal because we're so far away from the channel. But see how they can't stay in the midpoint. But here, if we wanted to keep playing the same game, we technically have triangle down, arrow, and then what I want is triangle up immediately, but this delayed triangle, oh, there's no triangle. If this would have had a triangle, it would have technically been okay because there's a star and trapping. So this trade with a triangle underneath and then the triangle on top of that is called a triangle trap, but there's also a version of it called like trap. You can trap a star as well. So if you get a star and then a triangle up above that, and it's bullish, it's often gonna lift, but you want that setup down here at the bottom of the channel, not above it. And so you can see even when this like kind of sets up appropriately, more or less, except for the fact that we didn't get the triangle here, but it would normally be here. They break resistance, which is that's got to be your target, which is not good risk reward, right? Your stop goes under here, and your entry goes here, and your resistance is like there. That's horrible risk reward. Even if you thought it might go to some level on your chart, if that level was here, like that's not very good if that's your best case scenario. So it's too late at this point, right? And it's just not setting up correctly. And then what we're watching for to think that this might actually be done is for normal market behavior to return, such as getting bearish bars back into the channel, getting to the bottom of the channel, and getting to the top of the channel. That would be a sign that this straight up nonsense might be done. It doesn't mean it's bearish though. It doesn't mean short. It just means it might, you have to go back to following all the rules, staying on process, and you actually might get a trade. Whereas really here, you shouldn't, there's no great trade here. Like you are technically above the green arrows, so you could do triangle down, triangle up, but look where you are. It's extremely aggressive. So green arrow, you'd have to be above this, and there's triangle down, but then there's another bar, triangle down, no triangle up. It doesn't set up. And there's no triangle down here, it's way up here. So, and then triangle down with no triangle up. So there's no buy signals here. And once you see this, you know it's not super bullish, and so you might as well chill. But if you were looking for the short, you've got arrow down, but there's no triangle up before it, so there's nothing to do with this triangle. But now we're looking for triangle up, triangle down within 3 bars. This one just missed it. 1 bar early. This triangle was 1 bar early. If this bar had a star it would have been an okay short. Um, so then let's see. So now the green arrow over here, they beat it. See how they got under it? So now what you need to do, and this can be done on the higher time frame as well. It's actually really quite cool. Um, Once it's beat, we want to mark it. If buyers can't re uh, reclaim the high of this, and the only bars that they can put up there are pink or bear bars, wicks, basically, you need to wait, in my opinion, unless you can target that for your entry. So, for instance, if you are okay getting out at 15,999 and you see triangle up with the plus sign underneath the channel, which is a totally great TNP setup, you've got odds to take that. It's going to work way more often than it doesn't, and you're targeting here, and sometimes it's going to go higher. All of that's, like I said, we're not replacing any of that. But if you want to do triangle down, triangle up, or apex traps, and really any trade, just realize that this is likely to cause you trouble if this holds. It can reverse. Now, note that sometimes this setup does sometimes stop. Here's a red triangle down. Then we have triangle up. Red arrow, red triangle down. That is a short if you think it's bearish. The entry's here, stops up here, and you'd have to think that you could get 1-to-1. So if you see this as a pullback in a bigger bear move, I don't know how to avoid it, right? You're not going to avoid it. You're going to get stopped sometimes. It's just so bullish that the bear trades just don't work. So, everybody was short this whole time. And so the moment they see anybody getting aggressive, see that star, you know, more or less, that it's over for the shorts again when you get triangle up above the star. See that? It's just, they're crushed. And if I remember correctly, we had a similar thing at the low because I thought I caught it. Let me see. Similar idea. So, star. So they have a star down. Maybe I'm wrong. I thought it's gotta be deep and then triangle up above it. I guess I'm wrong. Unless it was over here. Nope. Okay, I'm wrong. It must have been somewhere else. Oh, no. Doesn't get over it. See, what I really want is for the triangle to show up here. That's where they're really buried deep. Yeah, doesn't do it. That's okay. So, but that is a different trade, but it works just fine here. So, like I said, that technically signaled short, but failed. So now, arrow up, look where it is, way at the top of the channel. Are we excited about seeing that if we're bullish? No, we don't want to see that. Not up there, because if you're long only, you now need to get above this, right? To really, or at least hold it. to have really any chance of continuing. And if you go under you're going to have to work hard to reclaim it. It's not going to be easy most of the time. So they come up, they put a pink bar above it, which isn't good enough usually. And then they rotate back down. Now we're neutral. See that? From one side of the channel to the other. Okay, so like this confused me for a while. Start out. If you look to the right, there's a triangle up, and it's easy to think like, oh, that star is trapped, I'll get long here. Nope. It's gotta be this triangle that gets up. And now that triangle is a fine entry because you're at the bottom of the channel. It's neutral to bullish. It's been bullish, but neutral. And plus sign at the bottom of the channel above a purple bar. It's a strong entry. There's nothing wrong with it at all. You have to hold through a little pullback, and it's got a chance to continue. But in this case, knowing that green bar, that green arrow is there, and that we tried to reclaim it but failed, I should expect the VPOC in particular, where most of the volume was done in that bar, to act as resistance, which is pretty cool. So you might not want to hold a runner there. And when they do reject, well, now I want to start looking to the left for red arrows. Well, my red arrows were back here at this level. So again, this is the one that stopped. Arrow, triangle up, arrow down, triangle down, right? So to get that short to work again, we need either a trap trade that triggers at this level or below, or the triangle up, triangle down. Triangle up, triangle down, triggering at that level, and it goes low. So that's how you get that. But you're trading counter trend. So be aware of that. Okay, so we get green arrow. Again, am I excited to take that right away? Only if I can draw a line at an apex and it's trapping back into that apex. Now, if it's bullish, I'm okay with that trade. But usually what I want is triangle down, triangle up after this, but or a trap after this. But the fact that we have this guy trapped above us makes me nervous that that's going to continue to act as resistance. So I would rather either get really good odds with like a pullback entry or just wait for a better setup. Now, here, if you saw that as bearish, because that's resistance, you have triangle up, arrow down, triangle down, and I believe that fails. Yeah, and again, that's the way this is going to go if you try to trade in the wrong direction. That's just, yeah, you're going to take some stops. And the downside is always harder. And then here, though, triangle down, green arrow up, triangle up. So if you were long biased, you get paid well. And so now this guy that was trapped before, he's been reclaimed. See that? We got through him and put real bars up there. So now for buyers to continue with the rally, this low needs to be defended on the next pullback. So what we want to see is this triangle down, arrow, triangle up. The problem is our location, but on a day like yesterday, it's totally possible that it keeps going. But you can see that this one stops, and that's what's usually going to happen when you take a trade above the channel like that to the upside. That's just the way it goes. Most of the time, this trade is fine. This one, the win rate is probably like 30%. It's basically a breakout trade. So, but I've seen this happen before, where they reclaim and then up on top they put in some aggression. They can't get any follow through and they liquidate. That's just the way long setups fail, and you have to be ready for it. Now, I don't have a great way to get short here, and that's okay. Like I said, I'm not interested in catching every sexy move just because it looks like clean. Doesn't mean I need to be in it. I would rather be in the high win rate trade, which again after this is a pullback and a return to the top of the channel. Now look where that arrow is located. That is probably resistance. And then we have an arrow. And we have a trap back in. The triangle and a plus sign. Strong trade. It would be good even without the arrow. But having the arrow here helps. Actually, it's this arrow because we need to be above it. So it's the trap back in happens there, but I need support of an arrow below or equal to me. This one we haven't technically reclaimed yet. And that's likely why we get the pullback here. So if you want, you can wait for triangle down, triangle up, or star, triangle up. So there's the star trap. That one's also got an arrow. And that works beautifully. So I would rather skip this and take this anytime, or this. I would much rather take the high odds trade than spend energy trying to figure out which star is going to work, to reverse. Like in this case, 2 of them did work, but yeah, it's just I would rather have the high win rate. So here we trapped this guy, right? So that may be support. It doesn't have to be. You can't just buy it. But he has been trapped. Notice here it was not. We trapped this one. We went right through him. And then it became support here. So it's not like it has to work. And on the higher time frames, those support resistances will work way better than they will on the tiny ones like this. But do we reclaim? We do. So we get above that. That's bullish. So now that swing can produce traps if you're in the right place. The problem with this trap, it looks pretty because it's arrow into arrow, right? But look where our entry is on the triangle. It's at the top of the channel. Very low expectancy. So I'd skip that and wait to see if this becomes support, because if it does, we're going to be at the right spot. So let's see if they hold that right there. So now, I would have liked it to dip down because then I would be able to take a triangle up. Now I need triangle down or star and then triangle up technically. It might just miss me. Yeah. See, it just missed it by like a few ticks. And that's the way it goes. Sometimes it's not going to work exactly how you want. And that's okay, especially in these ultra bullish markets. That's how it's going to go. Um, okay, so triangle down, arrow, triangle up. If it's real bullish, you can take it, but look how close you are to the channel. Does this look super bullish? Not to me. I would skip that. Yeah, because that's what I expect to happen. I don't know, 70 to 80% of the time. I would honestly rather guess that the star is going to reject than buy the top of the channel. uh, I'm not going to do either of those, but that is better expectancy probably. Okay, so see how we have 1, 2, 3 arrows, but there's no red arrows. So this does not set up short in that way, and that's just the way it goes. But notice that these get trapped. So this can be resistance. And if you get like star up, triangle down, sometimes that can work. But it just doesn't set up. So let's find another one. Okay, arrow down. So it's bearish, but we're getting to the middle. We're getting further in the middle. Getting to the middle. It's not like ultra bearish, right? We're not increasing in like momentum. So generally, I want to get like an apex trap, and I want to get it at the top of the channel now because we've already tested the middle channel a couple times and even gotten through it. So there's no setup here, but if now that we've gotten narrowed down, an apex trap would work right there. So if this would have had a star, it would have been an entry. The triangle down is probably fine too. Yep. So even though you didn't get an algo on the trapping bar, the one that came back in, see they tried to go higher and they trapped buyers. That's why we call it a trap. So apex, trap. The triangle down is in this environment is just as good. It's just that you don't have as good of risk reward, but it's fine. And again, notice that this allows me to get short at the location that I want, whereas like trying to take a deep short down here just gets you totally like smushed, and that's just awful. See if I'm missing anything. I don't think so. So you have a triangle trap there. Did you have? So if we would have had a red down up here anywhere, this would be an entry. And there's another way to get that I'll go into later. But let's focus on one thing at a time. Okay, so here's the last seller, right? Last red arrow. We had the apex trap, got you paid to the downside. Notice red triangle way down here. So if I would have had a green arrow up, this white triangle would have been an entry, but didn't get the green arrow, so we wait. But it, again, there's other ways to get it, but with this method, you wouldn't get it. And then here, you've gotten behind. See how they tried to defend it? And then it got behind it? So this, because of that, the star there. Oh, whoops. This star down and this triangle up, that trap becomes so much better when you're getting behind this arrow. We've seen that. It was similar up here. Is it this one? No. Where was it? I guess there was no star here. I thought there was a star at the upside, but guess not. Okay, that's okay. It can be inverse too. So, where was I? Here. Okay, arrow down. So, if I get no triangle up, so no trade yet, but white triangle up, red triangle down at location would be good. And I don't see it anywhere. Sometimes it just showed up. Yeah, that didn't quite do it. That's too bad. That was close. Again, there's other setups. This is just an addition to the ones that already work. Okay. Green arrow, apex trap, triangle up, or triangle down, triangle up. Again, we don't really need the plus sign here. I mean, the arrow here, because we have a plus sign underneath the channel, and that's already a trade and perform entry. But the arrow here adds a lot of confidence for me that I know that I've got some supportive buyers below me. Then we get a seller, apex trap, triangle down. Now this one's a little bit dangerous, and that's because our triangle is behind the arrow. So, not wrong, just don't be surprised when it does that. Or comes all the way here and then stops you up. But this time it worked. Oh, and that's right now. So, and then at this point, if we were trading live, we would see this guy. They've gotten behind him, right? So if that becomes resistance after dropping down, you could probably short it, particularly if you put like a star up there. But I would prefer my shorts to develop at the top of the channel. And note, we've already done this move on this time frame. Under the channel, top of the channel, bottom of the channel. This is the short you want. That's the high odds one. Anything that sets up down here, it's going to be B grade or less. So doesn't mean it's always wrong, but you better have really good evidence. So one way to see how this setup would work in different environments is to look at it at different time frames. So I'm going to pull up the 60 tick, and I'm also going to demonstrate how on the higher time frame, I'm going to have to load some more bars. On the higher time frame, you're going to see the support resistance act a lot better. So data limiting, let's do like 15 days. And then I'm going to hide all the other drawings so we don't have any like high of the day or whatever. And then we're just going to do the same thing. So go back. Let's make this small. So we'll go back to like, here we are, 15 days ago. And we're just going to look for the same setup. Okay, I don't know what happened over here, so I can't tell if it's bullish or bearish. But arrow up. Here's where the channel starts coming in. We did not quite get it here. That triangle down needed to be at the bottom, so nothing to do here. If this produced an apex trap, it could be a long, but nothing. And now we've trapped him. So now, since he's trapped, now it's better when they're out of position and trapped. This one appears to be in pretty good position, so it might just produce like a chop zone. But if we can find some up bars at the top of the channel or down bars at the bottom of the channel, Those are going to be really sweet for like this. So this will potentially be support resistance later. Okay, so once we get this, arrow down, I mean triangle down, triangle up within 3 bars would give us a long. And you can see it does not set up here. And then we get and then apex trap would also work once you've gotten one of these. And you're above it. Nope, we get under it. So, like, I'm not thrilled. If I can't go any further to the left, but if I'm looking for an apex trap and it, like, shows up here, I can take it. But when we get underneath here, I'm a little less comfortable because I expect this to produce some resistance. If you go far enough below, you can just target that and then take profit. But usually this is like the hardest trade to catch. There are ways, but okay, then we get it down, right? But no apex trap with a triangle. I guess you could have taken this and not waited for the triangle and then gotten stopped. There's going to be stops, especially the downside. We get another arrow, triangle up, arrow, triangle down, goes 1 bar and reverses. What does that tell me? It's probably not that bearish. I guess I don't want to delete all. I just get rid of these. Whoops. Oh boy. Where's erase last? Oh yeah, right there. Okay. So, oh, I lost it all. Okay, so this one was offsides and out of position. So they trapped him. They tried to push and reclaim him, and they couldn't. So it reversed. It's no longer bearish, is what that tells me. So now I want to get above green bars, preferably new ones that haven't been trapped. And then I want to get an apex trap or a triangle trap or a star trap. So arrow up, apex trap, entry. It's got a star on it. I can enter right there. The star kind of got covered up by the arrow, sorry. It's because every time frame is a different size, so my mistake, but I can see it. There's a star back here, so that gives me apex trap entry at the bottom of the channel. That's a good entry. Now, triangle down, triangle up, above or equal to a green bar. That's also a long. So I might have taken a stop here. I've just made that back. Okay, the runners here stop. But note, our trapped seller continues to act as resistance. And we get another apex trap. Here I would have had to wait for the triangle because there's no star, but it's definitely valid. And now I'm up on the day significantly. Okay. This is where they tried to save that location and failed. Now we got, oh, was there any shorts? No, I don't think so. Oh, apex trap. That star is an entry short. And that's fine. Goes right to support. Okay, so then arrow, right? So now I'm looking for apex traps. Now we got the plus sign above a purple bar and below the lower channel, lower rail. So this is already a trade and perform entry, and it's amazing. Then we get a down bar, and it immediately gets beat. So, oh, I guess I don't want to do that, but this guy is going to hopefully be new support, but this one, this old one, especially his VPOC, but we'll just put it at the top, that could be resistance. So we might get choppy here. But technically, if we got triangle down, triangle up, and we had room to resistance, you could try along in here. But see how this acts as resistance? And like I said, on the higher time frame, this works pretty consistently. Now here, triangle up at resistance, arrow down, triangle down, short. I'm looking down here for an apex drop. Does not come. Okay, another arrow. Not an apex trap. No triangle. No star. So, nothing to do with this setup. No triangle. And then here, I missed it. Apex trap. Enter long. Here. See how they're trying to use this as new support? And it works. Arrow up. We don't have any triangles to take advantage of, so it just grinds up and we still miss it. Okay, this is too high for an entry. And yeah, don't do it. Most days it's not going to work. This one it might, but no. Let's see. Is that it? Yep. So this guy just got trapped. And he's out of position. Way high up. So that could be resistance. Okay, this is an apex trap. Oh, wait, no, it's not. Nothing to do here. That's too bad. It just missed. Okay, so interesting. So we have a in position seller and then another out of position trying to help out this guy. It's probably going to get choppy. It's a lot of disagreement in here and really no clear. Oh, apex trap. Oh, but it didn't get above this, so you have to be pretty... Oh, you got this one. So, triangle, second pink bar too. That's already a trading perform entry. So you can see the best trades are already... We already have an entryway, a way to get in to these, but it does give us a few more opportunities here and there. So any triangle down, triangle up, or star trap right here. Triangle down, triangle up. At the top of the channel, it's pretty risky. And then arrow down, arrow up. So triangle down, arrow, triangle up. Top of the channel, you better be right that it's bullish. But if you are, it does work. Arrow down. So if this guy gets beat here, he's out of position. Nope, we just go higher. Triangle down, triangle up. It's still clearly very bullish. Triangle down, triangle up, triangle down, triangle up. Star, no triangle. Okay, arrow down. Now we need a star or a triangle up that gets beat. And no. Okay, arrow up gets immediately beat. That's usually bearish. Because see, we saw that over here too. I didn't even point it out. When it's super bullish and you get arrow down and it gets beat, like that makes triangle down, triangle up like a little more palatable, even though it's so high up. Okay, arrow up gets immediately beat. So technically you could probably take this, but it's risky. Then, let's see. Star down, triangle up. And you're above an arrow. And you go higher. See how now the down arrow gets immediately beat? Right? So that triangle up, if you think it's bullish, is pretty good. And then this level becomes support. So that's kind of cool. Let's see, these are all in position, so we don't have to mark them. We want to find a... No, this guy's out of position. Bottom of the channel. So this is a good example. So out of position seller. The triangle up right away is aggressive. But if it's bullish, it's probably going to work. But what works better is wait for the pullback. And if they can't reclaim this, and you get a reason to get long like this, it's pretty consistent. And then here too. See how like they can't reach it? And then star triangle up. Star triangle up. That's usually what it is star triangle up, but it can be star down triangle up, like trap setups too. Did I? No, didn't miss any. All right, so we're clearly above green. Triangle down, triangle up with the arrow in the middle. That one stops. You're at the top of the channel, and it's not like screaming higher. It's actually dipping into the channel. So that's when those fail. Not a good idea. But if this can get trapped, if we can get an apex trap on it, this is better. This is better. Triangle down. Triangle. I still don't like the location. So all those are kind of unfortunate. Okay, so now all of these could get trapped. Yep. And so see, oh, this star is interesting. It's one late. That's okay. Let's see if they come back. Yep. Oh, that's cool. So this star seemed like it belonged here, but they put it on the bar here, and then they came back and like fixed it. So when this guy gets trapped and they reject it, man, I would like to take that, but technically I need star up or triangle up, or else triangle down. Let's see if they give it to us. Nope. Okay, so this one gets pretty much immediately beat. Oh, and that's red now. Okay. So at the moment, let me just erase all here and see if there's one in the area. I don't think we've reached this one. And this one is right in the middle. Let's just see. So this is in position. Well-positioned seller. Became resistance. Looks like it's no longer being respected. Yeah, I don't think it lasts that long. Okay. So now, whoops. Now, we're going to do something crazy. We're going to go to, not crazy, but we're going to go to a different day. So I'm going to load, let's see, use date range. Let's do, okay, 2023, let's do like, I don't know, 2/14. I'm just picking a random day. 22. This will take a minute, but hopefully it's worth it, because then, at least on the 24 tick, we can get a sense if we had this idea back then, would it have been a good idea or a bad idea? And it was a very different market in February. So let's back it up. Oh, interesting. I've got level. Oh, I see. It's current levels. So we're going to hide those. It'd be funny if they worked. Let me back this up as far as I have. Did it right there. Okay. So, February 15th. Wait, where did I see it? Okay. So we're just going to do the same thing. And I realize this is boring, but this is how you get better. And how you build confidence. So no, they get above the channel. They give us the arrow down, right at the top. Looks sexy. I don't have a good way to catch it right now. Like that. So, interesting. But how do I know that this one won't do that? I don't know. So, for the time being, we're just going to call that luck. Okay, so arrow up, right? Now, we need an apex trap or triangle down, triangle up. Apex trap, triangle up, paid, right? Arrow down, no short, no triangle up, arrow, triangle down, and no apex trap, maybe. That would be the short. Kind of paid a little bit. And then arrow up. Arrow up, but nothing here. No, okay. This guy got pretty stuffed. They tried to use him as support. Now do they use him as support? Let's see, this says look for shorts. Right there. Apex trap, go lower. Triangle up. Arrow, triangle up. Okay, this one is an arrow. Oh, no, apex trap doesn't quite reach. Arrow. Now we can take triangle up. Or triangle down, triangle up. Star trap. Man, that's too bad. This, I mean, you did have an arrow down here. That might be okay. Star trap here. That's pretty. That's the way it's supposed to look. Okay, triangle up, arrow, triangle down. It's in position, right? And if you thought we got this one, really you want the next apex trap up here, but because it was green, the last signal is green, but we are, oh, we're not below. Well, we're below this one. The problem with shorting is that we've got a trap short right there. So, yeah, that maybe isn't a good idea. Interesting. So it only lasts like one. Oh, I see. They come all the way down. Lift it. Yeah, no setup. See, I don't know if I would have known to take the long. It does look long, but the market was different then, and this is what you don't really need the arrows in this kind of market because there's plenty of rotations, there's plenty of opportunities. Okay, arrow up, apex trap, long on the triangle. Yep. See, no arrow down. Triangle up, triangle down. Yeah, that just missed. Okay, so arrow up, apex trap, long. Try if we're still long. I see that. That's what's tricky. We haven't had a seller over here, except for this one who got stuck. This one still seems to be being used as support resistance, but this one clearly got stuck. And then triangle down, triangle up works. Up. Oh, there's Star Trap. So long. Stop? No, not stopped. Wow. Cool. Okay. Sure. No setup. They just beat him. No apex trap. It's close, but I wouldn't do it. It looks bullish. Arrow up. No. They miss it. Okay. No apex trap. No. Oh, triangle down, triangle up. Kind of. Apex trap. There we go. It's triangle trap. Oh, no triangle. You'd think it'd be star, triangle up. But no triangle, okay. Okay, down. Triangle up, triangle down. So that would technically be bearish. Yeah, that gets crushed. And it doesn't set up the other way. So bullish. Oh, interesting. Arrow up, and then triangle up, triangle down, and it reverses. This is resistance. So see, you got to be careful. If you want to take the plus sign here, you're taking it right into resistance. Okay. I'll tell you too, the yellow and the blue are a new entry I'm testing. I'm not going to explain it really, but when it comes during rotational markets, they're good entries all on their own. They're better if they're followed by a triangle, and they're best if followed by a purple or pink bar. And when they are beat by a triangle and they are counter trend, I mean, that one's also a star, but it can act like a trap, I believe. But here it says buy this, but there's resistance, so sell this. And then the purple with the triangle says it's more of an likely, even more likely toward getting late here. Okay, let's see. Arrow down. Long entry. Yeah, you are above this one. I mean, it's obviously not short. Triangle down, triangle up. That obviously works. Okay, now we've got, can we get an apex trap behind that? Right there. So I'd take this and get stopped. Okay, it definitely does not work as often back then. Arrow down, and they just dump it. Nothing to do. Except this. See how that acts as a trap with the purple triangle? Here, no triangle down. Okay, arrow down and then arrow up. So basically either direction, I guess. So if this traps, oops, or if that traps. So this one traps. So I would normally take this, but this is resistance. Yeah, I don't like that. Oh, arrow down, triangle up, triangle down. There we go. And then there's the blue followed by triangle down. Arrow up, gets crushed, bearish. Star down, arrow down. That's probably going to be a trap. But it says bearish if you're under it, but you're not. So we trapped this guy. It would have to be like, it's technically this, but it's a little bit scary. But it's technically arrow up, arrow down. I mean, triangle, I mean, with the red to the left. Okay, arrow up, triangle down, triangle up. Hey, there we go. That one worked. Nothing to do because there's no trap. And yeah, you just missed this whole thing. And there's another arrow at the apex. See, these, when they're followed by pink or purple with triangles, really good entry. For like at least a scalp. Triangle down, arrow, triangle up. Clearly bullish. I would take that. See, and then here's where it gets confusing because, like, do you take this at the top of the channel? Like, I don't know. After a down triangle? I'm guessing no. Yeah. See, now it doesn't look so bullish. Yep. Triangle up, triangle down. That's a much better trade. Does it stop? It's close. It does stop. Wow. That was shitty. See, I don't know what to do in this situation. Like, should we be bullish or bearish? I don't know. But I know that I want, if I'm bullish, I want to trap on that, which I get right here. So, long. I'll take that. No arrows to trap off of. Oh, what about over here? If I wanted to be bearish, you'd get stopped. The bear traps are harder. So once again, blue at the bottom. Lift. If they're well positioned with the trend. Alright. Arrow down, triangle up, triangle down. You'd expect it to go lower if it's bearish. It doesn't. So triangle down, arrow up, triangle up. Way out of position. Yeah. Super, super dangerous. This is probably okay to short. Don't really have reason to think that it's bearish until here, so I don't think I would have taken that apex trap. But if they give me another one, now I can. Now it says look long. Oh, right there. Triangle down, triangle up. Boom. So you just wait for the one that's in the right place, and you do better, even back then. I don't know how to suss this out. Oh, I didn't see him. So I really want the trap back there, but if I guess with him here, does that mean once I've gotten below him, triangle up, triangle down, it'll be okay? I don't know. Because I've got a green one right here. So at this point, do you get any entries? Nope. Not till here. I don't know. Maybe that does work. No signal. Okay, way up high. Probably going to get trapped. Apex trap off of a green one, but my resistance there, it keeps me from taking that trade. Yep. Triangle down, triangle up, but I'm way below this, so I don't think that's good. There, that's probably a good entry. It's not positioned right. I want it up here. This one's better. Bottom of the channel. Lift. Yeah, now I've gotten back above this. So I do not want to take that. But then this is right into resistance. I don't think I'd want that either. Yep. Triangle up, arrow, triangle down. Bearish. Okay. I mean, it worked. It maybe didn't work great. But, and there's definitely some points, really what I see is once it starts rotating, you just don't need it anymore. But I wouldn't necessarily say like it stops working. It's just not the best filter. Because like, I don't know what to do with stuff like this. where like it's rotating nicely. Like I do know, but not with the arrows. Like you miss all your entries. And that's pretty annoying. There's just nothing triggering until here, and it's at the wrong side of the channel. Yep, and then this is going the wrong way. So I think what I see, anyway, is with this arrow entry, or using the arrows to filter my entries, it's not necessarily going to work as a filter at all if the market's rotating in a healthy way. But if it's getting stuck going only one direction, and I already know what direction that is, it can open me up for some new trades. And then if the market is not moving, it looks like I might be able to go to different time frames, and it should still work, because at least it worked at the 60. Does it work on the 15? Let's see. Go back to regular trading hours. Do like 10 minutes here on the 15 tick. See if it's the same. Okay, so arrow up. Bullish. No entry. No entry. Arrow down. No trap. No entry. Star trap. Down. Bearish. That worked. Okay, now we're back into this one. That's not quite an arrow. Apex. Oh, it is an apex trap. So that's an entry. Yep. Dude, it totally works. Like, I'm not completely sure what to do with this. Nothing, I guess, because there's no entry. And then we trap him, so it's probably bearish. Not entirely sure how to catch it. Triangle down, arrow, triangle up. Boom. Oh, it totally works. Okay, the other thing I promised I'd show quickly, because I'm tired, is a really neat scalping technique that I am practicing, but it's a little tricky to execute. It's not hard. The idea is we're going to do it long only, and I'll show you how it went today. We're going to do it long only, and what we're looking for is a purple bar. Here's the open. We're looking for a purple bar here. And then we want a triangle up to close above the purple bar's high. That's the only rule. And then be aware of where you are on the chart. If you want to improve this, the delta on the bottom, I've like color coded a little bit. The bigger, okay, if the, what's it called? The bronze orange, if that shows up on the purple bar that you're trapping, it's a good trade. If it doesn't, it's not bad, but you have to be careful that you're not trading right into big delta. I'll demonstrate that in a minute. So that's a good entry. So we have to get an up triangle above a purple bar's high. So that one closes above the purple bar's high. Have we gotten above the big delta? Yes. So that one's good. That one stops. No purple bars, so we'll just wait. Okay, purple bar. Purple bar. Need a triangle up. Oh, there we go. Whoops, sorry. Purple bars. Gotten above a purple bar. Where's the biggest delta? It's this one. Yep, we got above it. That's fine. Boom. Purple bar, triangle up. We got above the biggest delta. Good. Yep. So even though we took a loss, we'd be positive. And like I said, it does work in the inverse, but not quite as cleanly. So there's a lot more of this rubbish where you get... Oh, well, no, this one worked. Okay, purple bar, triangle up. Your biggest delta is way back here, and the one right before it is that bronze color, so it's usually pretty good. Yep. Boom. Doing good. Purple bar, triangle up. Now, the location here sucks. We want to be down here, so you can probably skip this one. Plus, the bronze and the big delta is up here on the triangle down. So our expectancy is crap. So I would not take it. Purple bar. Triangle up. That one's good. It's got double delta, so I don't know if that's going to work, but that one does trigger. Yep, it works. Purple bar. Right there. There's like no delta, so I'm fine with that. Oh, interesting. That gives us just a little bit. Need triangle up. Oh, right here. Did that get above? Yes. Big delta. It's technically here. It's, I guess it's okay. I don't like how bearish it is, but yeah, that probably stops. See, that triangle does not get above the purple bar. So that one misses. Purple bar. Oops. Triangle up. Definitely got above the bronze. So this is usually pretty good. No purple bar. Oh, right there. Bronze is on the up bar. This might not work. Oh, but it's a apex trap, so I'd probably take it anyway. Yeah, it's a better trade. It's not just a scalp. Remember, this is just for 8 to 10 points. It does not mean the market's going up. It's just mean reversion. So the big delta is here. We're above that. I think this is good. Yeah, that's what I thought. Oh, there's another one. Again, location, not great. Big delta, we're above it. It might still work. Yeah. Wow. Okay. Bullish, I'm going to keep doing it. This has got the delta right in our way. See that double bronze? This is probably not going to work. And we're way up at the top of the channel. I'd probably skip this one personally. Yep. So once you get a feel for where they work and where they don't, that almost becomes like intuitive. And it's like playing a video game. No big delta. I'd take it. Yeah. Oops. Went too far. Location's perfect. It's also an apex trap. Our big delta is up here, so I'll take it. Just thought I'd check if it triggered short, but no triangle down here. Oh, there's one. Purple bar. We're above the delta. Location sucks, so probably skip it and wait for the apex trap, but it technically is bullish, but yeah, not surprised. But again, once I get this, I can just be done. Or short. Okay. Purple bar. Did I get above the delta? Oh, maybe not. This one I think is slightly bigger, and it's right there. This might not work. Yeah, see that? So And that's where we are right now. So the bear work version, pink bar, triangle down. Did I get below the bronze? Yep. Go. Need pink bars. Pink bar. So triangle down technically, but look where we are now. We're under the channel. And is momentum increasing or decreasing? Well, volume's decreasing at the moment. And delta is not getting more negative. So I'd say this is probably stalled. And I'd be better off waiting to see if we can trap this guy, because star, and then get above him. And I've got this green here. See how they use it as resistance? So this area here, I can just use as like a no man's land, and for a while, and then once this channel moves down, if I can get a short at the top of the channel, that'll work better. All right, I'm going to bed. Hopefully someone found this interesting. I will talk to y'all soon. For anybody who made it through the whole thing, thanks for watching. And here's the contact info again in case you need to get a hold of us. All right, have a good rest of your week, folks.